Well, but be that as it may, let's get chatting with the corporates that we've lined up for you on the show. Our first guest is textile specialty chemical manufacturer Fineotex Chemical. They saw the margins expand for the first quarter, although the revenue for the company declined. To understand what the business is looking like going ahead, we have Sanjay Tibrewala, the whole-time director and the CFO, joining in. Thanks a lot, Mr. Tibrewala, for joining in. There has been a gross margin expansion this quarter. I mean, this at a time when global chemical prices have fallen. What led to that? And what's the outlook on the entire year for revenue, margins, volumes?
Thanks for having us here. The point is that in the last year, we have a 40% top-line growth already. That has also been quite instrumental in due to our technical solutions and sustainable solution kind of products which we have launched. Going forward, as we have experienced in the last 2 quarters, there has been a dip in the chemical prices. As such, the average realization prices have gone down. In the last quarter, we have a volume growth of 20%, and that has also contributed, and almost the turnover of the quarter has been same on year-to-year basis as well. And at the same time, there has been almost a 30%, 28 or 29% rise in the PAT margins and the PAT also. So going forward, this is the way we have been looking at. It seems that the demand is coming back, and there has been a strong recovery in the textiles. As such, our 55% business is in the FMCG product lines, which is the cleaning and hygiene segment. So actually, the 55% business is on FMCG, which is quite a great business to be focused upon. Together, we are expecting, like have been in the last few quarters, we have been expecting the similar kind of growth rate in the coming years also.
All right. Okay, all right. Hi, Sanjay. Good morning. Thanks for speaking to us here on CNBC TV18. Well, top-line degrowth, but that's because of prices. But what is impressive is your margins. Your margins in the first quarter itself, both gross as well as EBITDA margins had improved. Do you expect to continue with this margin trend of around 23 to around 24%? And also last year, you did around 520 crores of revenues. This year, what should the ballpark number be?
See, as such, in the last couple of quarters, we have always have a similar kind of gross margins and the EBITDA margins. So the way we have been proceeding ahead and the kind of deliveries our team has been doing in terms of the exciting the customer with new kind of product lines and sustainable products for the FMCG, cleaning, hygiene, and the textiles, it seems that we will be able to definitely sustain those margins going forward. And talking about the top line developments, we are quite hopeful that the prices, like we are seeing, it's already coming back to normalcy. I mean, it's on the way to normalcy in the last 1 month. It seems that, in the coming quarters, we can have the similar kind of average realization prices on a macro level on the entire chemical industry. So I think, yes, we can expect similar kinds of performance, what we have done in the last year as well.
So 520 crores last year. This year, it will be in that vicinity. Will it be higher? Will it be lower? Give us a broad range.
Actually, it will be definitely higher, and we are expecting it. Our volumes have, in the last 18 months, our volumes have almost doubled, I think more than doubled by now, with our new expansion in the Amarnath plant. And we have been having quite more capex plans, and we are on the right gear, it seems so. So there has been definitely a jump in the volume expansions, and I think that will definitely contribute to the top line growth as well.
All right, so we presume that the first quarter numbers of 130 to 150 crores stays, and you annualize that, you get close around 600 crores in terms of revenues this year itself. Let's talk about capacity utilization, since you spoke about capex. Last year, you ended about 62% of your capacity utilization. At peak levels, what does your overall revenue potential look like? And by the end of this year, what should your capacity be ramped up to?
As such, in the last year, our expansion has happened from almost, let's say, from 60,000 tons to 104,000 tons. So definitely, if you calculate on those bases, you will be talking about 62%, but at least it is about almost like 70% in the Q4 last year also, because that was the time when the entire capacity was in place. Going forward, we are hopeful that we will be having a utilization of at least 75% as we proceed ahead. And that will also definitely lead to, in the same sectors for the FMCG businesses and textile specialty, that will be leading to the top margins also, as well as to the top lines. We expect to have similar kind of growth in the top line as we have done in the last year as well.
I just want to understand this now. Last year, you grew very, very well. There was a big jump out there. This year, as you're saying, prices are a little bit subdued. So Mangalam had derived that number, 130 to 150 crores, multiplied by 4. will you be closer to around 600 crores, given that you're saying that capacity utilization level as well will improve from here? And the 75% you're talking about is on the entire 100,000 tons, right, of capacity?
Absolutely, absolutely. Yeah, so taking those numbers in place, we are definitely sure we should be around or maybe crossing that numbers, which you mentioned about. This is also, we would like to mention, our company is more of a solution-driven company, and the most important things for us is the EBITDA margins and also, if you can see our kind of the expansions which we have done and cash utilizations. We are focused on EBITDA margins, EBITDA growths. It's more about solution providing to our customers. So this is a sustainable business model we have.
So EBITDA margin target is between 23 to 25%, right?
That has been going on as usual in the last few quarters, and we expect that same trend to continue.
Great. You said 55% of your revenue comes in from the FMCG space. How much comes in from the textile space, and how is that vertical looking going forward?
Textiles demands are always wavy. If you see from the COVID time, in fact, COVID was great for the textiles. It always has its wavy demands, as per the retail companies of USA and Europe. So this is something which is always there. And now the textile is also showing a great sign of recovery in the last 1 month. So going forward, it seems that, things will get normal in textiles. That will also help us to grow our...
How much comes in from textiles? What proportion of your revenue comes in from textiles?
At the moment, it is almost 50% of the revenue is coming from textiles, and that's also a segment. But from the volume point of view, it is only 35%, more or less.
Okay. So 35% volumes come in from textile, 50% revenue comes in from textile, 55% volumes come in from FMCG. What revenue comes in from FMCG then?
It's almost around, let's say, 40% or so.
Got it. All right. Sanjay, final question before we let you go. At times the chemical space gets a little bit tricky. And you're talking about, being a solutions player. So that's why your focus more is on margins, which is good. From a stock market perspective, shareholders will like that. But what helps as well is that you have some cash in your books. So give us the updated number. What is the cash in books? And are you on the prowl? How do you plan on using that? I think in the past many years, you'll have given a dividend. You'll have done buybacks as well. How will you utilize this?
See, as such, we have been a debt-free company since a very long time. It's also because of the kind of capital allocations. We are quite disciplined about the capital allocation. We have done a lot of organic growth in the past, which has also been resulted in the last year. We have great organic expansion plans also going forward. Everything will be funded from the internal accruals. As we speak, almost 175, 180 crores cash on books is available right now. And this also, we are looking for, more opportunities. And there are a lot of joint venture opportunities coming in for Make in India kind of proposals from many countries globally who are planning to set up their facilities in India. So we are tying up with them. We are discussing on those things. And as we have more and more opportunities going forward, we'll be utilizing it for similar kind of ROC and ROE kind of returns in future.
Got it. I think that's in excess of around 30%. Well, thanks so much, Sanjay, for stopping by and giving us all those details. Nearly 600 crores of revenues, margins of around 23 to 25%, and sitting on cash of around 180 crores.